Good afternoon, good evening, good morning, depending on your time zone. You're welcome to the Binta's webinar on building wealth as an immigrant, mastering cash, credit, and capital as an immigrant. Now to our panelists. First on the list is none other than Jennifer Copen. I hope I pronounced that well. She'll come back to that. She's a senior vice president with Primary Car. Jennifer advocate for wealth building and financial literacy, a top 50 women in wealth um, um, finalist in 2024, and serves on the Financial Professional Canadian Board. FP Canada board, and she leads Black entrepreneur of BCs and support on the staff community. Some special highlights in her career journey. She's a certified financial planning. She have over 28 years in financial planning. She's a world professional, Canada top 50 women in wealth as of 2024. And I can tell you, it's the same thing is about to happen in 2025. She's a board member in FP Canada. She's an executive director, Black Entrepreneurs of BC, and financial literacy advocate for newcomers and youth. Ladies and gentlemen, make welcome Jennifer Copen. Please put your hands together, guys. Hi, Jennifer.
Thank you, Maxwell. And it's Copen.
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 Well, Copen.
Thank you.
Thank you.
What a wonderful introduction. Thank you.
All right. So I have Jennifer right there. And the next for us is Emeka Umeaha. Emeka Umeaha is a partner and a senior financial consultant with IG Private Wealth Management and Struthers and Udea and Associates. Emeka specializes in high network financial strategies, is a finance professor at VIU and a part-time officer in the Canadian Armed Forces. A committed community leader, he has served as president of Nanaimo, I hope I pronounced that right, Affordable Housing Society and co-chair of the Alzheimer's Society of BC Work for Memories. Some key highlights. He has a lot of designations. He's a CPA, CFP, a CDFA, RLC, and a wealth and financial planning, underwealth and financial planning. He's a professor of finance with Vancouver Island University. And officer part-time, for the Reserve Army in the Canadian Armed Forces, is the past president, Nanaimo Affordable Housing Society, and community advocate for Alzheimer's Society of BC and the Rotary Club. Ladies and gentlemen, make welcome Emeka Umea. Oh, sorry, Udaha. How did I get that?
Thanks for the introduction.
All right. Thank you so much. Okay. I'm adding Emeka to the spotlight. All right. So we'll move straight to the questions. So first, we want to discuss building wealth, right? And we know when it comes to building wealth, there are a lot of questions that go through people's minds, right? So first thing, why is building wealth crucial for immigrants? And I will start with Jennifer.
Thank you, Maxwell. So why is building wealth critical for immigrants? I would say building wealth isn't just about money. It's about security, freedom, creating opportunities for the next generation. Many immigrants come to Canada and give their families a better life and wealth that allows them to buy a home and send their kids to university without heavy student debt, support family members back home without sacrificing their financial stability, even retire comfortably, rather than relying solely on government pensions. So without wealth, many immigrants end up living paycheck to paycheck, struggling to make ends meet. But with the right financial strategies, they can break the cycle and have a better future.
Wow. So breaking the cycle, having a better future beyond just making money. Fantastic. Thank you so much for those insights. And Emeka, do you want to add your piece to this question?
I'll just piggyback off what Jennifer's mentioned. So a few additional points to that, I think, would be resilience, right? You want to build wealth. You don't want to be in a situation where any little mishap in your life derails you completely, right? So again, going back to that financial stability. And like Jennifer said, it's the freedom to do what you want to do, right? So you all hear those statements where people say, hey, I want to get to a point where if I'm working, it's because I want to work, not because I have to work, right? So I think that's the level of wealth where we all aspire to get to. And also taking it a step further, there's a lot of intergenerational wealth planning that we do in our industry, and you cannot do that if you haven't properly built wealth for yourself, right? So being able to pass that wealth on from generation to generation to generation, again, requires you to have built a significant amount of wealth for yourself, not only to help you last through your retirement, but to be able to help your kids and help your grandkids. And typically people do this at the end of life. So people will pass away, their will would do all those gifts to their kids and grandkids. But I mean, if the goal would be to do that while you're alive, right? Like imagine having to gift your grandkids things while you can be alive to see them do those things, right? So I think that would be sort of the areas I think I'll touch on is sort of the resilience part of it, having that intergenerational wealth transfer piece to it, and then again just having that financial stability.
Awesome. Financial stability, resilience, and transgenerational. Thank you so much. My next question is, then why is it hard for most people, given all this importance that you guys have adjudged to building wealth, why is it still hard for most people to build wealth? And what do you consider like top barriers, when that comes to mind? Let's start off with you, Emeka.
So in my industry, so I'm dual licensed. What that means is I'm investment and I'm insurance licensed at the same time, right? One of the big things I find that are very lacking in a lot of people's financial plans is risk management, right? So it's very easy for us to say, hey, I want to save, I want to save, I want to save, I want to save. We're saving for retirement, we're saving for emergencies. But the one thing people don't realize, the one thing people don't actually take into consideration is, sure, I've saved all this money. I have a wife. What happens if I get hit by a bus? Now I can't go to work. Well, I still have expenses, mind you, but now I have no income, right? Or what happens if I get diagnosed with cancer, for example? Well, what happens is I can't work. I have to go all the way to Victoria, Vancouver for treatment. My wife is no longer able to work as much because she has to drive me to these appointments, right? So she's taking less, so again, when we're looking at a lot of barriers is not having the right risk management strategies. I find like that's like the biggest thing because it's very easy for us to have all these plans to want to save money, but there's no plan to actually protect what we're saving, right? And that's where you see cases where people lose their jobs and they're just thrown into a tailspin of financial hardships, or like I said, one spouse, maybe that spouse is the high income earner, has a disability and can't go to work anymore, and there's no plan. What will happen if you're disabled, if you have a critical illness, or even died? Like, I mean, that's a big one people overlook is they feel like life insurance is for like the wealthy. No, anyone can get life insurance. You can get life insurance as little as $100,000 of coverage, right? So I think having those, the lack of having those things in place, I find is very easy to have people get derailed and make it more difficult to build wealth. The other things that are very obviously, would be the cost of living. So I think this affects every Canadian, whether you're an immigrant or not an immigrant. The cost of living in general is just higher than normal, and it keeps going, up and up and up. So I find like that's another hurdle that gets people to the point where it gets difficult to build wealth, where when you're always chasing your tail, when you're always living paycheck to paycheck, what's there to build, so I find like those are the two main key things I see, just again being in the industry for over a decade, is it's just where we are as a country in general with the high cost of living. And again, I find like that lack of proper risk management, which can terribly derail a financial plan and make it difficult to come out of it.
Thank you so much, Emeka. So those failure to protect the wealth we're building, and of course the rising cost of living. So let's get to Jennifer. Beyond these two very, very cogent reasons, are there any additions you want, in terms of why it's hard for people to build wealth?
I completely agree with Emeka. There's no point in having a plan if you have no backup plan. Because if there's nothing to fund the plan, then there's just no plan. So you're completely right. Some of the barriers that I see are, lack of financial education, actually getting educated, finding out, what is available and how to use the financial instruments in Canada to your benefit. I find some more of the barriers would be limited credit history. That's why we're all here right now. A lot of immigrants come to Canada and they don't have a credit history. And so, I know that that's where Binta comes in. They're able to help us get our credit history from back home and, give us tools to be able to build credit here and not just start from scratch, because starting from scratch is very difficult. No credit is bad credit. Low financial literacy again, underemployment, new immigrants coming here, usually a lot of their accreditations, they're not recognized. And so they're forced to take lower paying jobs. So you put all these ingredients together and it does form quite the barrier. So I think that covers most of it. Yeah.
Thank you so much for that. Yeah,
I will.
indeed.
Sorry, if I could chime
Okay,
in, just
sure.
piggybacking with what Jennifer is saying. Like you hear the statements OPM, other people's money, right? Typically, how the wealth build wealth is they never use their own money. Cash is king, right? It's flipped the way you look at the wealthy high net worth individuals and how they leverage things. They never use their own cash, right? They always use credit, right? You hear OPM, other people's money, right? But the problem is with new immigrants coming in, we know like that's a strategy to use, but it's difficult accessing the credit, right? Like Jennifer said, you have no history in the country, or a lot of the rent and the mortgage or whatever you've paid in your home country is not recognized at all. So again, it stands as a barrier to the point now where before you actually get to the point where you can leverage that OPM, being able to leverage credit and use that credit to generate more return, whether it's assets or leveraging real estate or whatever it is, it becomes very difficult because you actually have to get over that hurdle of what immigrants typically go through in the early days of when they arrive.
Fantastic. Thank you so much for adding that point. And I think it's also very, 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 very instructive. So we'll move on to the next question. And I hope our audience are, catching those points that you guys are making. Um, so now that I see a lot of conversation was going around credit. So now let's, it becomes a very good segue to credit and cash flow management, right? So why is building credit early crucial for wealth building in Canada? Let me start off with Jennifer this time.
So it's so important because in Canada, your credit it's what makes you attractive to any financial institution.
Mm.
So how to build credit faster, I always let new immigrants know that they should get a secured credit card that reports to Equifax. So you can start to build the credit that way. Connect with Binta now that we're connected, and I realize that there's a way for new immigrants to be able to pull their credit from back home, that gives them a complete jump start. So that's great. If they do have any kind of credit, keeping the balance below 30% is also going to help their credit score. So those are some ways of being able to build. Another one is a cell phone. Just having a cell phone bill in your name and not your spouse's name. That all these little things will help to build credit. They don't have to be big car loans. They don't have to be big ticket items. These all report to Equifax.
Fantastic. Thank you so much. So Emeka, still on the same question, right? Do you have any other point to add to why, building credit early is really important?
So it's very important for a variety of reasons. Like Jennifer mentioned, it gives you access to loans, give you access to mortgages. For most cases, you can negotiate lower interest rates. The better your credit is, right? And the reverse is the case. Like the worse your credit is, the worse interest rate negotiation power you have, right? No kidding. I've seen people actually have car loans with 20% interest rate, right? I've seen people with credit cards where you miss a couple of payments or your interest rate is not good. I've seen credit card payments with 26% interest rates, right? So again,
Whoa.
having the right kind of interest, having the right type of or having the right available credit would give you access to not just loans, not just credit, but also it'll definitely help you negotiate the type of interest you get. That being said, also, like, going to Jennifer's point, a lot of people typically don't think about credit because they say, in their head, well, I'm not looking to buy a house now, so I don't even worry about it, right? I'm not looking to buy a car now, so I don't even worry about it. The problem now is, and I've seen this again, case in point, you typically will want to buy a house, 4 years down the road, 5 years down the road, you've saved all this money. And
Yeah.
then all of a sudden you realize, well, my credit is not as good as I thought because there might have been a bail. And so I'll give you a real life example. So I had a friend of mine who moved here from Ghana and then landed in the NIMO. He got a Rogers phone plan. And then Rogers, obviously, the phone bill was too high, so he canceled it. But then I think from when he canceled it and when his bill was produced, there was like a $100 or $80 charge or something that they sent him a notice for. He thought he had paid his account. Nothing happened, right? Now, fast forward 4 or 5 years down the road, he was going to buy a house. Well, they pulled his credit. That $80 that looks as minimal as that is shown as a bad debt because collections, right? Because collections is probably calling him. He's probably moved a couple of places. So that gave him a lot of hardship. Like that, I mean, it took a couple of months for them to get it off because he had to chase them around, get a letter, pay it off, have them resend it to Equifax. But just think about all the trouble he went through. And in
Yeah.
this case, he probably had people guide, like I was able to guide him. But imagine if he didn't have the connection to be able to guide him on what to do, right? So I think not just worrying about building credit, but keeping track of your credit and monitoring your credit, right? A lot of people think they have to. There's a lot of access to free credit monitoring systems in Canada. Like people don't know that. Like you don't have to pay $20 Equifax. Credit Karma is one of them. I use Credit Karma, right? It doesn't cost you anything, and it allows you to monitor your credit and just keep track and see to make sure nobody's also applying for credit in your name, right?
Hmm.
That's the fastest way I've seen people wreck the credit is you want to buy a house. They say, oh, well, you're owing, $20,000 on this loan. You're like, I didn't take any loan. Well, it's your credit, right? And then good luck trying to chase that down and trying to pay. Just think about the amount of emotional headache you have. If you
Hmm.
attached a home you've seen, you thought you're going to buy the home, and now all that's shot because of one mistake like that, right? So I think just being on top of it, in addition to hopefully working with Binta, to be able to sort of transfer the credit, but not just transferring the credit, but making sure you're on top of monitoring your credit.
Yeah. So it doesn't just end with transferring those credits. You also have to monitor and ensure you do all these things you put there. Jennifer, you want to say
Actually,
something? Yeah.
yes, just one more thing. First of all, great
Sure.
points, Emika. But one other thing that people might not realize coming to Canada, because I think most immigrants come to Canada and most of them rent. Now, most of the time now, when you go to rent, they're going to check your credit.
Hmm. True.
Also, if you go to find a job in Canada, a lot of times they're also going to check your credit. So this isn't just about buying some expensive car or getting a credit card or getting a mortgage. The foundational things you need to live in Canada, renting a place, getting a job, they're all dependent. Most of them are dependent on credit. So that's definitely something that you want to lead with. But yeah.
Yeah, I definitely had my credits checked when I wanted to rent my place, so I could associate with that very well. Okay, thank you so much. We'll move on to the next question. But just before we do that, I also want to crave the indulgence of the audience. When you join, kindly help us mute so you don't distract, our speakers, when they're making their points. And if you do have any question, just drop it in the chat box. If we have time, we'll try as best as we can to get to those questions. So, now let's talk about cash flow. All right. So sometimes it seems people are living paycheck to paycheck, but even in those supposed low income, what strategies can immigrants use to manage their cash flow effectively and avoid financial stress? So let me start with Emeka this time.
So a big thing, so part of what we do here, what one of the services we provide for clients is cash flow management, right? So the big thing where it's easier said than done is actually creating now creating a budget is not usually the hardest. Like anyone can create a budget. The issue is actually sticking to that budget, right?
Sorry.
So that's the big one, right? Is we all hear it all the time, like live between, don't leave beyond your means, right? Don't try and keep up with the Joneses because a lot of times you can get caught up in all that mess, right? We've just come in here, we want to fit in. Everyone's doing this, everyone's financing the latest Mercedes. then we go and finance the latest Mercedes, right? So I think the key thing is just create a budget and stick to that budget, right? Manage your debt wisely, right? Here, as sad as it can be, it's very easy for you to get credit, right? I mean, we might think it's a big deal, but for certain areas, maybe getting, credit for a mortgage, or maybe getting a mortgage might seem like a struggle, but you can go to any dealership and they will finance a car for you in a heartbeat, right? I mean, the dealerships that would do it with zero income, like it's ridiculous how shady some of them can be, right? So again, just learning not to bite off more than you can chew, because that's going to be the beginning of your downfall. Is if now your expenses are way more than the income that you're bringing in. Then that just leads to your stress, and it just causes you to spiral, out of control, right? So I think the big thing is creating a budget, sticking to the budget, making sure that you're not spending more than you're bringing in. And a big one too, I advocate for this, like you can see from my bio is, if you can have more than one job, have more than one job, right? Like having multiple streams of income is so not talked about as often, because think about it, like, you have a full-time job and you have a part-time gig, and then something happens which is beyond your control. You get laid off from one job, right? At a bare minimum, you've got something coming in from somewhere else, right? So I think if you can handle it, multiple streams of income always make sense. Like you hear of the wealthy people, they never have one. Like Elon Musk, we're going to pick on him, right? He's got Tesla, but he's got SpaceX, and he's
Space
got,
days.
so you've got people who are wealthy who can afford to have one stream of income, creating multiple sources of income for themselves, right? So we have no, and it doesn't have to be anything too crazy, right? Just having another source of income would reduce that burden and also help with your cash flow, right? So I think again, creating a budget, sticking to the budget, not biting off more than you can chew, ensuring your debt is under control so your expenses are not over, you're not in a deficit every month. And if you can, a second job would always help with your cash flow. It will also give you that peace of mind if any mishaps happens with any of your one of your jobs, right?
Yeah, thank you, Emeka. So Jennifer, just building on what Emeka said, not keeping up with the Joneses, creating and sticking to the budget. What other strategies, come to mind for you based on your experience?
Definitely what Emeka mentioned, but I would follow up with a few other strategies as well. I try to get my clients to follow the 50-30-20 rule. 50% needs, 30% wants, and 20% for saving and investing. That is the best rule of thumb we can follow. A big one is setting up automatic savings. Treat savings like a bill and transfer money automatically to a TFSA or RSP. Set it up. It doesn't have to be a huge amount. It can be 25 bucks a month. But what happens is that becomes a habit, and it's an addictive habit because you see something growing. You see something at the end of the year from your year. And so setting up those automatic savings, I think, is great. I think we have good intentions to invest 500 here and maybe 500 in 6 months, but I promise you expenses come up and that 500 can be used for something else. So setting up automatic savings, even if we feel it's just a drop in the bucket, I think it's just so important. Next is, like Amika said, was limit impulse spending. We have to differentiate between wants and needs. What do I want versus what do I need? What can I wait for? And what's that opportunity cost? So taking a look at those, I think those are some strategies that immigrants can use.
Thank you so much. I think that was the 50-30 rule, awesome point, just which it needs once an investment and setting up those automatic. Yeah, at times we have the intention to, at the end of the month, I'm going to put in, maybe end of the quarter, I want to put in $500 and there's something comes up, you spend the money, but just taking them one bit at a time. Thank you for those points. My next question will be, what are some financial red flags that indicate a person might be heading towards financial trouble, right? So let me start with you, Jennifer. Based on your experience and interaction with people, what are those red flags that people should be worried about?
The first one you could probably guess would be maxing out credit cards or only paying minimum payment, because
Yeah.
those interest costs, that money doubles. The amount that you owe doubles over time. So it's really important to get that under control. Next is using payday loans. I'm not sure where
Hmm.
people are coming from if they have them there, but they're all over here because people are trying to keep up with a standard that they can't. So they're going to payday loans and they're having to just continually do it because they're always at a deficit. So using payday loans, I think, is a really huge red flag. The next one is borrowing money to pay bills. It's a sign of living beyond your means completely. And so I think those three red flags, but also not putting away money for yourself. We have to treat ourselves like a bill, you know?
Hmm.
And so when you think of it that way and you think of yourself like a bill, then in your mind you're more deserving of the money. And so making sure to put away this money, because saved money gives you options. That's it, right? So those are my top ones.
Save money, give you options, and treating yourself as a bill, right? That
There you
was
go.
really, really very instructive. All
Yeah.
right, Emeka, so on these same questions, your own experience, what are those financial red flags?
So I'm gonna speak coming like as though I was a lender, and just because we're still on the credit conversation,
Hmm.
this is another thing I usually typically get from people regarding the credit score. Is like, oh, like my credit score is crap. Like, how can I improve my credit score? Or my credit score, is 500. I feel like the world is ending. The credit score itself is not a big deal. Like, I can increase your credit. Like, I can give you strategies to improve your credit score like in a month. Like your score itself fluctuates dramatically, right? The part where people tend not to focus on is the credit report. And that's where, as a lender, that's where the red flag can come in. So typically, things that would hit your credit score and impact your credit score negatively is, well, the obvious. When you have multiple lenders hitting your report, pulling your credit score, that's a red flag. That could drop your score, right? So and as a lender, that just tells me, okay, well, this guy's shopping for credit. Why, right? The big thing is your utilization rate, right? So people don't realize this. Is like, oh, well, I pay my credit card on time. Well, as a lender, if I pull your reports and I see you've got three credit cards, one line of credit, and the balance is, credit limit is $500, your balance is $499. It doesn't matter if you're paying it every month. It just tells me that you have a high utilization rate, like you have a high dependency on credit, right? So, like Jennifer said, right? Always just like as a lender, that's a red flag, right? So again, that's one way to wreck your credit, right? So making sure that you're and how do you prevent that? Like, if you're able to pay down your credit significantly, or your credit card or line of credit, ensure that you are not going over 40-50% utilization rate. That would typically help with the credit score. So again, going back to red flags, like that's going to be one of it. It's like if there's huge dependency on credit, it just tells me that there's a cash flow problem, right? If there's a cash flow problem, then automatically it tells me that you're on a track to that financial trouble, right? So just ensuring that your cash flow is under control, man. Like cash is, you hear this all the time, cash is king, right?
Cash. Okay.
Like that's a big thing. Like and typically too, because of how the system is in Canada, once you are in that rat race, like once you get yourself messed up to the point now where you're chasing your tail to pay bills and you're just like hand to mouth, like it gets very difficult to get out of it because the bills never stop. Like your bills will never take take a pause, right? Like so you're always constantly chasing your tail, and it gets sometimes it just spirals people out of control.
Awesome. Thank you so much for that, Emeka. I hope people are taking notes. Do not max the credit and try to pay them down. Okay. Next question. Let's talk about mind shifts now, right? So, what do immigrants need to do in order, to have that mind shift, to adopt those financial success, in Canada? So a mindset shift do immigrants need to adopt to achieve financial success in Canada? I don't know if the question is clear. So now we are moving into the cultural piece of it. So I will start off with Jennifer.
Okay. So can you repeat the question one more time?
Yeah, what mindset shift do immigrants need to adopt, to achieve financial success? So because they say you are what you become what you think, right? Something there's a saying like that. So it starts from the mind. So how do we get to that place?
The biggest one is let's shift from saving to investing.
Hmm.
Saving alone is not enough. Investing helps money grow. I'm going to give you an example of this. And I think mostly only Africans are going to understand this. I think we can all agree that we know what a susi is, right? A susu?
It's just, yeah. So
Somebody?
yeah, I do.
Yes. So I come across this very often, and I'm sure everybody on the call understands, but I'll just repeat it for the sake of repeating it. So it's where you have a group of 10 people who's putting $1,000 a month into a pot. Every month, one of the people gets to take the 10,000 out. Now, this is something that my mom did back home in Mauritius. There's a lot of people who do it back home because banking was not the same back home in some places. Now we come here and they continue to do it. And the thing that they're missing out on here is they're missing out on all the interest.
Hmm.
They're
Hmm.
missing out on all the interest, and they're also leaving themselves liable to another person fulfilling an obligation. So that to me is a mindset shift, and that is still going on right now. The next one is from working hard to working smart, finding ways to increase income through higher paying jobs, side businesses, or even investments. Just like Amika said, there's ways to increase your income. And even if it's just through taking advantage of like tax credits and like tax preferential investment vehicles or RSPs, like these all increase your income in some ways. The next is from cash only to credit wise. I know that a lot of debt is bad, but debt is not all bad when you use it to your benefit. So using your credit card to pay for things that give you points, and then you go home and pay for it, as long as you've got that attitude of going home and paying for it, then what you're doing is you're gaining a benefit where you wouldn't have gotten one. So understanding what kind of credit card do I need? What are the things that I purchase most? So using these tools that we're given here in Canada, even the RSP and TFSA, using these tools for our benefit, but first we got to understand them. And so connecting with a financial coach or doing your research, talking to somebody like myself and Amika, these, with 28 years experience, they're in being able to tap into that kind of knowledge. It saves you from making the mistakes that maybe I made or maybe the people around you might have made. So those are some of the mindset shifts that I see.
Thank you so much for those shifting from savings to investing, shifting from working out to working smart, and then trying to leverage those credits. There are some potentials using credits. If you at this time taking Maker's advice, being able to stick to your budget, know what you're using it for. Those are some things that could be very helpful. So over to you, Emeka. Beyond these points that Jennifer's made, are there some that jump out at you? How to have those mindset shifts?
So I'm gonna just build on what she's already mentioned, and the big one
Fantastic.
is the cash, the saving and investing. Like that's a big one, and the reason why is like there's a lot of vehicles that are available where you can actually build wealth in Canada, and it drives me crazy when I see people where they have like 100 grand in cash, and then it's going back to what Jennifer's saying, like I don't care what you're doing, whether you're having a group of people gather money together or whether you're doing it yourself. The thing is, cash does not appreciate. So if I have 100 grand in cash now, it's saved, but in 10 years, it's still $100,000, right? It's not invested. Like it won't, there's no growth. Like you can't build wealth from that, right?
It might even be less because of
It
inflation.
might exactly. So your
The
purchasing
value.
power. So that's where you have, and that's I think another mindset shift that a lot of people, because sometimes people are so focused on the dollar value, where it's like, oh my God, I have $100. I want to make sure my $100 is $100 in 10 years, and they put the $100 under the mattress. Sure, yeah, in 10 years you still have $100, but what can that $100 actually buy? Like
Yeah.
how much purchasing power has that $100 lost over the years, right? So yeah, you're totally correct, right? And then the big thing I find also, and I see this with a lot of people who move here, is again for me, I'm a sucker for credit. Like I love credit if I have to, like because again, credit if done correctly can maximize growth. Like you'd be amazed. So I'll give you an example. I had a guy who came in here, and he was looking to buy a car. Right. I'll even start small. He was looking to buy a car. And his mindset was, hey, I'm going to save, and this is 4 years ago when interest rate prime was like 2.45, right? And then he was actually saving his money. I think then it was like $50,000 or $60,000. He was going to buy a nice car, and he was actually physically saving $60,000, and he was going to save $60,000 and throw the $60,000 and buy a car. Now that sounds logical. It's like, oh, I saved my money and I bought my car. But for me, I was like, that's something where you have to actually mentally have a mind shift from. Like cash is, why would I lock up all my cash into a depreciating assets? Like I've just taken 4 years or 3 years to save all this money, and then I take all that money and I lock it into an asset that actually depreciates, right? So my advice to him was, well, why would you do that? Like, you mean you can go in here and put literally $4,000 or $5,000 in this car. You can finance the car. Prime is really low, so interest rates are really low. So your payments are going to be minimal, right? First of all, and then you still have $55,000 that you can do and invest and make 6, 7, 8% on, right? So now you're making 8%. And then you're also paying your car at whatever 2% or 1.8%, whatever it was back then. So a lot of times I've seen people who would give up the potential of making 8, 6, 7%, and they're in a hurry to pay off a 1% debt, right? Again, it's a mental
Mm,
thing. Oh my God, I don't want to have any debt. But some debt is good debt, right? Um,
good.
Debt, as long as the interest is manageable, is not necessarily bad debt, right? I mean, so can I still, as long as my cash flow can allow for it, and I can service this debt, well, will I give up the, potential of investing correctly and making 6, 7, 8% return at the expense of trying to pay off a 2% debt because I don't like debt. So I think just getting the mind off of the fact that, oh my God, all debt is bad debt. Oh my God, I have to pay for everything in cash.
Mm,
I think that's a mindset shift that has to occur, because you can't build wealth if you're trying to save cash for everything, right? Like again, the people who actually make things happen, again, OPM, other people's money. You are able to leverage credit and build off of that credit to maximize your wealth.
yeah, I think that for that buttresses Jennifer's point, about not just saving but investing, right? So invest, make use of the OPM and then invest the rest instead of just locking up your dollar amount in a depreciating asset. Thank you on that, and I hope mindsets are shifting in the audience. um, okay, this somehow similar, but is a little bit nuanced because we've seen this struggle play out. For immigrants when they come in, they find it probably by the third or fourth generation for some. That's when they finally break forth. Maybe one person, star member of the family now become the financial secure person. How can immigrant break generational cycle of financial struggle and build lasting stay? I know we've spoken a lot in terms of mindset and that, but just feel free to build on that cadence. So let me start with Emeka this time.
So I think a big one is just financial education. Like, and this is an issue I see across the board. Like, it's not just the immigrants. Like, you'd be amazed the amount of Canadians who do not have financial literacy at a basic level, right? So again, understanding credit, like understanding how you pay. Like, people don't even know how the taxes work, right? Like people, like I know people who lose a lot of money to the government in taxes just because they're not structuring certain things in a certain way. So I think a big one for generational cycles of financial struggle is just start them young. Like,
Mm,
you don't have to be 25 to start learning about finance, right? Like just the basics of understanding that, hey, um, if I make a dollar, I don't keep a dollar, right? Because that's typically where you see this with even celebrities, people who you think will have all these advice, where they get signed with a football team or basketball team, and they give them their first million. Before you know it, they've blown the $1 million in buying cars, and then the next year goes by, and then IRS comes and says, well, you got paid $1 million, you spent $1 million, but now you owe us 400,000 in taxes, right? And then now
yep.
that starts a cycle of just like chasing your tail, because now the next year goes by, now you've made another million, but you're already $400,000 in back taxes, right? So two things: you either have to downgrade your life significantly so you can catch up, which never happens, or you keep that same lifestyle, and then now you're in that cycle because your tax keep accumulating, interest keep building on the amount that you're owing. So I think just having that financial literacy, which again can start as early as, my nephew and my niece are like 11 and 9, and they understand the basics of it, right? We're
Awesome.
not diving deep into like finance, right? But just letting them understand the concept of money, letting them understand the concept of just basic credit on a basic level, right? So I think starting it from that younger generation would definitely help, generations after break out of that cycle. Because
Hmm.
once, and that's the thing too, like, Jennifer was talking about how you don't need $1 million to start investing. Like you can start investing, you can do what Jennifer was referring to, like the regular month, it's called, pre-authorized contribution, right? If you started $100 at 15 years old, which is not a super unrealistic time because people work at 15, right? You started $100 a month consistently from age 15. By the time you're 65, that's almost $750,000. Like that's like it didn't require you to do anything major. Just sticking to that little amount, and it could be $25, right? So just starting early, I think, is a big thing because that way it eventually translates to, teen and translates to adult. Um, and just getting educated also. Like, I mean, just now it's so easy to find materials. It's so easy to read on stuff. Uh 10 years ago, probably not as accessible. 20 years ago, information wasn't as accessible. Now you can go online and you can find anything you want on just financial literacy in general. So I think not only are we to teach the younger generation, but even as adults, is just to get ourselves more versed on what's going on and what we have available to ourselves.
Thank you so much for that, starting young and ensure that, it keeps building on that. Jennifer, I would just like to, get your thoughts on this question as well. How do immigrants break that generational cycle of financial struggle?
I think one of the ways is actually something Amika mentioned earlier about life insurance.
Hmm.
Because when there is a death in the family, especially an immigrant family, that does become the story going forward. And so making sure that we do have life insurance in place, because that can, if someone does pass away, that makes a legacy of struggle, instead of a legacy of wealth. It's before and after, and we've seen it. So that's one thing. And I'm gonna mention again Emika's comment about teaching children financial literacy.
Hmm.
Finding programs for kids, like in BC, I'm not sure who's in BC right now, but in BC we have something called the Junior Black Achievement Awards. And so I'm a financial educator with that group. If you go to Instagram right now and you search Junior Black Achievement, you can follow them, and they have programs for Black youth. They have programs on financial literacy. They have programs on college prep, on speech writing, on coding. They get different experts from all over the country to come in and teach our kids for free. And so finding networks like this where you can put your minority children in these programs where there's kids that look like them. It's not just their cousins. There's other children just like them going through some of those same struggles, and it becomes okay. It becomes a topic that we can all talk about. And so financial literacy for children is something that I champion, and I'm very involved in it because, even my nieces and nephews, they understand it. I went to work with my dad when I was 15. He started the business I took over. So at 15, I was starting to learn about financial literacy. At 19, I got licensed. And then at 29, I took over his business. So
Wow.
I have been around finances since I was 15 years old, so that this is a part of me now and is a part of my family's conversations with my 11-year-old nephew, and so it just becomes a topic of conversation, whereas in some households, they don't talk about finances. Make it okay and safe for these children or for these family members to not be embarrassed and to speak out loud about these topics, because it makes it it makes it less taboo. And I think the more we talk about it, the better we get at it, because we learn from each other, especially as immigrants. I may not know everything about every other industry, but this is what I know about. So this is what I share. And then I'll take information from Maxwell, from what he knows. And I think sharing information like we're doing tonight, I think that is where we start.
A big one's
But
just going off of so to Jennifer's point there. So there's also another organization called JABC. I don't know if they're in other provinces. So Junior Achievement of BC. And you can actually, if you're in BC, I think they're in all the provinces. But you can actually let them know, and then they would send financial volunteers to your school. So I've used to volunteer with them, and I'll go into elementary schools and secondary schools. And so you can actually let them know, of course, talk to your teacher's school, or your kid's school, and you can actually invite them to your kid's school, right? And they have financial exercises for different grades. Like I said, I've done for, Dover secondary school all the way to Rock Sealy elementary school, right? So I think that's a way to get that going for that age, and it gets them exciting too. And a lot of those programs to get the parents involved as well. So I think that would be a good thing. Like in addition to what Jennifer mentioned, would be the junior achievement of BC is just letting them know, hey, like I want you guys to come into my kid's school, and usually they will talk with the school and they're able to set something up as well.
yeah, awesome. I think we do have the same here in Ontario. There's probably in across various regions. There's Central Ontario, Southwestern Ontario, etc. So
Yeah.
thank you for your service, Emeka, as well on that. So moving on, next question for us will be, I think we've pretty much answered this question, where we're trying to build, the importance of financial literacy, what it plays in well-building. I think, Emeka and Jennifer, you've alluded to this, at a great length. So I'm going to skip this question and move on to the next one. Um, Now, this question, it can be a bit political, right? I want to know, do they really? Yeah, I know we are all immigrants. It seems the system is against us and all that. But then, how do systemic barriers impact immigrant world building, and what strategy can one, really have or put in place to overcome them? But I think the first thing is, the answer might seem so obvious, but let me just hear your thoughts on it. Do they really exist? Let me start with you, Mika.
Well, I think they do. I think we'll be foolish to think they don't exist, right? I mean, like I say, so I'll tell you this. Like I've lived in multiple countries, and there's racism everywhere. Like even in Africa. Like in Africa, it's different because it's not racism because we're the same race, but it's tribalism, right? Like
Yeah.
you see one country hating the other country. We're all the same race, so we'll be very foolish to think it doesn't exist in Canada. It does. However, it's very subtle. You go to the US and they'll tell you to your face like how they don't like you. Canada, they might smile at your face and then behind the scenes do what they want to do, right? So it's there. Like we can't hide that fact, right? Um, well, I mean, that being said, we have the barriers. I would say would be that the language barriers is another thing. Uh, whether we think we're discriminated against because of the skin or color, like all those are things that are beyond our control, right? The things that we can do to overcome them are things that we have control of. Like how someone feels about me, I don't have control of that, right?
Hmm.
But what I can do about my situation, I have more control of that. So again, we've talked about things like, educating yourself, right? Materials are now very accessible, right? Um, There's a lot of free financial systems out there. I mentioned Credit Karma. Credit Karma is a good one, right? If you really want to start investing, playing around in the investing world, I think it's a blog. It's called Motley's Fool. They go in there, they give like stock tips and things. So you don't really need to pay an advisor, like if you don't really have the money to go on that scale. But there's free resources online is what I'm getting at, where you can sort of be you can sort of access to overcome having that lack of financial or access to financial resources, right? Again, educating yourself, right? We know we can have barriers because of the color of our skin, or because of how people look at you or whatever it is, but setting yourself up to a point where um, you almost have more than what's needed. I think is sort of the word I'm looking for, right? So I always say, like, if I'm talking to someone and they tell me, hey, I'm doing this level, I would personally do up to that level to probably get the same result. It's the reality of where we are. But if we need to do a whole lot more to get to the same level, I think it's something where we need to acknowledge that is there, and be ready to actually do at that level.
Thank you so much. I think I'll pose the same question to Jennifer, right? So, what are those strategies to overcome those systems? And maybe let me hear yours from you too. Do they really exist in your own opinion?
Yeah. I would say the systemic barriers, I think as immigrants and as colored immigrants, and then I'm going to put one more in for me, and being a female, I think it's the trifecta
Yeah.
of barriers. And I realized that at a young age. And so what I find has helped me to overcome some of these barriers is, first of all, networking with people like Emeka, people with experience, people with networks, people that, make relationships, make people like you. Because if they like you, then they'll introduce you to people. It is about knowing people here. There's another thing that really helped me is increasing my education. You can't argue with a certification. So that helped me to be able to overcome, especially working in finance. Working a female in finance, especially a minority, is an anomaly. It's a very old system. And so getting more education, working on networking, showing up to networking groups and making colleagues. I find that has really helped me in terms of overcoming the barriers that I face, even currently, in the job that I do, even though I've been doing this 28 years.
Wow. Thank you so much for that. Well, I think that takes us to the next question. This is about investment now, right? So, and what I want to ask here is, so what are, without looking as if we're spoon feeding people, right? But what do we consider like the safest and most effective ways for immigrants to start investing in Canada? So let me
Well,
start with Jennifer. Oh, sorry. Let me start with Jennifer. Can you guys see
When
my screen? Can you see
yeah,
my screen?
yes.
Yeah. Yeah. Like, what are the safest and, most effective ways for immigrants to start investing in Canada?
Okay, I think one of the ways that a lot of immigrants don't take advantage of is when you do get a job in Canada, a lot of times, sometimes, an employer will offer you an employer match group pension plan. So it's where the employer puts money in and they match you. A lot of times we are thinking so in the now that the thought of any money coming off our paycheck and going away for something further into the future, it does seem like you're giving up too much. But
Mm,
what you need to think about is that money that employer is putting, that's free money. And so we have to take advantage of it. Now, do I think you should take advantage of it over and above the matching percentage? No. I think that whatever that employer is going to put towards your pension, 100% you match it, because that is free money and that is that automated savings that's forcing you to invest.
mhm.
And another tactic would be using TFSAs. TFSAs are, to me, the most amazing investment vehicle, because we put money in, we let it grow, and we're able to take all of it tax-free. So I think that's a really great tool to use. And just investing, like Amika said, saving is, we're not saving our way to financial independence around here. We
Yeah.
invest our way to financial independence, because we have to keep pace with inflation. We have to use rules like the rule of 72. The rule of 72 tells you how fast your money will double given a certain interest rate. So let's just do some quick math. Let's say we had a bank in front of us and they said, if you invest your $10,000 with us, we'll guarantee you 3%. And for most people, 3% is pretty attractive. But to find out how much that'll become, you just take the number 72 and divide it by your interest rate. So 72 divided by 3% in this case, so 72 divided by 3 is 24. So what that tells me with no hard math is that my 10,000 will double to 20,000 in 24 years. It's the math. Now let's say we were going to get 12% on our money. 72 divided by 12 is equal to 6. Here your money doubles once every 6 years. So it goes from 10 to 20 to 40 to 80 to 160 to 320 to 640 to 1.2 to $2.5 million in 40 years. And so I think understanding how money can double, I I think that's really important, and searching out ways to make sure that our money is keeping pace with that. Yeah.
Thank you so much for that and for that love 72, doubling the money. Let me take Emeka's point on this, and we know we are almost at time. So Emeka, do you also want to share
So I
your
mean,
opinion?
to not beat a dead horse, going to Jennifer is just the power of compounding is what she's referring to. Right? Like people, it's such a very underutilized strategy. Is just how fast money compounds, right? Because then again, think about it. If I invest $1, my dollar makes 3%. Well, the next 3% is going to be on top of the dollar and on top of the last 3% I made, right? So that just compounds and compounds and compounds, right? So your money actually would grow faster just by that logic alone. So a few accounts that I think, especially for immigrants though, that I think are very underutilized would be the TFSA and the RRSP. The TFSA would be more so because, again, you put in $1, it's already considered you've paid tax on that dollar. The dollar grows to five, that's all tax-free, $5 tax-free.
Mhm.
RSP, on the other hand, which I think is very underutilized, which you can actually kill two birds with one stone, is you put $1 in an RSP, it becomes a tax deduction that year. So most likely you get a tax refund, a big tax refund from that, right? That money now can be grow tax deferred until you take the money out down the road. So you have that tax deferral. You're saving money on taxes by using the RSPs. What people don't also realize is you can use your RSP to fast track your way to buying a house. So not only are you saving in the RSP and reducing your taxes, there's something called a home buyer's plan that allows you to leverage your RSP to buy a house, to use your RSP as a down payment to buy a house. So again, it just multiplies. So not only are we saving for retirement, we're being tax efficient because we're saving on taxes. We're also saving for a down payment as well, right? So it's one account that I think is so underutilized. People just think RSP and you think retirement. No, I mean, you can use an RSP for retirement, but I've just told you how I've done three things. I've not only saved for retirement, I've been able to be tax efficient because any dollar I put in my RSP, I get a tax deduction that year based on my marginal tax rate. And then I can also leverage it for a house. Not only a house, there's also something called the lifelong learning plan with the RSP. So not only can I use my RSP for a down payment up to $60,000 for a house, I can also use it for school. So we're talking about financial literacy and educating yourself. You can leverage your RSPs as well, right? So again, one bird killed four stones, right? So I think
Yeah.
it's just information, right? That's one account I think like it's totally underutilized by most people.
Thank you so much. I know we have more questions. Unfortunately, we might not be able to get to them because of time, but I'm so happy to do this some other time. If you guys were gracious enough, I think those are the logistics. Let's just have final words, right? So, in bringing it all home, are there last words that you may have? Let me start with you, Emeka, and then I'll come to Jennifer.
I think that the thing is just and this is where some cultural aspects come into play. I shamelessly do not care how you feel about me. I'll ask you for help,
Mhm.
right? Like that's how I am. Like that's how I grew up in the industry. Like I mean, I've been doing this for over a decade, and I was that guy where if I see you doing something well, I'll come ask you. Like, what's the worst that'll happen? Like, you tell me no. Okay, whatever. Like, what do you do, right? So I think that's a big thing. Like, I think in general, as new immigrants, there's a saying where it's like you don't know what you don't know, right? So,
Mm.
if you don't ask, you don't get it, right? And that's just what it is. So if you move into a community, reach out and see, are there people who are, who can be mentors? Are there people who are immigrants like you who are already in certain fields that you want to get to, or ask for resources. I think that's where a lot of people fall short, is that not asking and thinking people are going to volunteer information to you. That's not going to happen, right? So if you don't ask, you don't get, right? And a lot of times a lot of people do not do certain things because the information never gets to them, right? Before you know it, 20 years has passed and you've lost out on all that opportunity. So don't be shy. Like I do exactly as I preach. I shamelessly would ask for help. Again, the worst that happens, you tell me no, okay, sure, and then I go to the next person, right?
Thank you so much. Shamelessly ask for help. So over to you, Jennifer. Last words.
What I would say is to be patient. You know, wealth building takes time. It's small, consistent, regular steps. We need to be consistent. Anybody can diet for a month. But to do that consistently, that's where you see the big results. Another one is using all the government benefits available. This is where you do your research. And if you don't have access to it, you have people like me and Amika. You know, we're all community members. This is just information. But the saddest thing I find is when people qualify for these government benefits and they're just too afraid to apply.
Yeah.
And so doing the research, and because why make our life more difficult? And surround yourself with the right people. You know, we don't self-diagnose ourselves when we're sick. We go and see a doctor because the doctor went to school and, you know, the doctor knows. It's the same thing with your finances. You know, getting advice from a professional, to me, that's the best way, because there's someone who's done the work and who's had the experience in the industry to be able to hold your hand through this whole process. And there's nonprofit organizations like FP Canada, Financial Planning Canada. If you go to their website, there's a ton of tools, free tools that people can just log in and be able to get access to the kind of information they need. You know, there's budgeting tools, there's debt reduction tools, you name it, and it's all available to us. And so I just encourage people to do their research and to get their questions answered. We're not in this alone. And so all you need to do is reach out.
Thank you so much, Jennifer. Thank you so much, Emeka. You guys have been super, super, super helpful. And I believe the audience have learned so much, from all these things you've shared with us. You guys took from your time and, gave us pour from the abundance of your expertise and, a wealth of knowledge to share with us. And I think this is some conversations we should be having as immigrants, on this journey to financial security and financial freedom. Thank you so much for your time. And at this point, I'm going to bring the organizers, Pascal, on behalf of Binta, to tell us a little bit about Binta. Once again, ladies and gentlemen, please react to, but just tell me how you feel on the chat. Use an emoji, emoticon for how Jennifer and Emeka has, passed all this knowledge. Yeah, thank you. I see that. I see a lot of celebratory reactions there. Thank you, thank you, thank you. It's all I could say. And over to you, Pascal. Pascal, you're muted if you're speaking.
Right, thanks, Maxwell. Can you hear me? Can everyone hear me very well?
Yeah, loud and clear.
All right, thank you so much. So everyone, thank you so much for making the time. Jennifer, that was amazing. Emeka, that was wonderful. Thank you both for sharing your wealth of knowledge. I was taking notes while you both were speaking. I think I'm more confident to become a wealthy Canadian after listening to you both today. So thank you so much for that. And I just wanted to say to everyone, the reason why we decided to put this event together as an organization is we've been studying how people's credit history and score are impacting their whole life experiences in Canada, right? Like migrating to a new country is very hard, right? Let alone trying to navigate the very complex financial system that Canada is. It's crazy. I spent 8 years working in banking in Nigeria. When I came to Canada, even though I was working for another bank in Canada, I was still very confused and still trying to figure out the system. So part of what this series is going to do is to help people uncover some of those things that are a bit mysterious about what is banking, what is credit, how do I build wealth, just so that we can have more colorful, more interesting lives living in Canada and not just living from paycheck to paycheck, but building wealth as a people who are moving to a new country. So thank you so much for making the time. So this event was put to you, was brought to you by Binta Financial. And Maxwell, if you can just move your slides a bit more, and I will talk about this. All right. So Binta Financial, our focus is mostly to empower immigrants. And how we do that is we help people from all over the world move your hard-earned credit history from overseas to Canada. And not just that, we also help you build your credit in Canada through different means, okay? And Maxwell, keep going, please. All right. So with Binta, what you can actually do is you can carry your history from your home country to Canada. And what that would do for you is it will help you unlock, opportunities in housing and financial services, like things you ordinarily would not be able to access. We can help you open up some of those doors through some of the programs that we run at Binta. Okay. And so that's what we do. Our mission is very simple. We are very immigrant focused. And I am an immigrant. I moved into Canada a few years ago, and I dealt with my own fair share of challenges as an immigrant, right? And what I've decided to do is to partner with some other smart people across Canada to build this platform and make sure that people have a far better experience living in Canada and accessing even more opportunities while being here. All right, next slide, please. All right, so we have a free what do I call it now? We have a free, is it package, I'll call it, or gift to everyone who is here today. Now, we have a partnership with Equifax Canada, which is the second credit bureau, I say second, not inferior, but one of the credit bureaus you have in Canada, where we are helping immigrants build their credit history through their rental payments. So you would typically pay your rent, right? But what we are doing today with Equifax is if you pay your rent with Equifax and you report that rent through Binta, our platform, then it helps build your credit score over time. Okay, I wouldn't have the time to go into the details of how that works or why that is so, but I would strongly encourage that if you are not a landlord now, or even if you're a landlord, but you are still renting, or you're a tenant and you rent a place and you pay your rent on a monthly basis, your rent doesn't currently give you any additional value. So what we are doing with this particular program at Binta is we give you an extra credit or value for the rent that you pay, just so that you can build your credit over time, and that can help you access better opportunities. And I like what one of our panelists, Emeka, mentioned about you want to buy a house in 4 years and 5 years, right? It's easy to say that I don't need anything about credit history right now. You'll be very surprised, right? Credit history is not something you build when you need it. You build it long before you need it because it doesn't happen overnight. So strongly encourage you to take advantage of this program that we have. It's going to be free if you are part of this program today. And Maxwell, if you go to the next screen, so all you need to do is to scan this barcode and it will take you to a registration page. So it's a very simple, seamless process. So register for the program. It's not going to charge you a dime. It won't charge you a dime today. It won't charge you a dime tomorrow. And it will never charge you a dime. So it's going to be absolutely free for you to use this service to build your credit history. Okay. And then one more final announcement before we go. Next slide, please. So we have another program coming up around this time, exactly on the 27th of April. Now, you've heard us talk about credit score, credit history so many times. Jennifer mentioned it, Emeka also did during the conversation. We have a whole session dedicated to talking about the terrible mistakes that most immigrants make. I'm sure most of you you've walked into Walmart stores or Best Buy or Hudson's Bay or all of these other stores. And they always tell you, oh, come and take a credit card and get an extra 10%, 15% discount, right? Or a bank has offered you a credit card. We've heard all kinds of stories of how people, they've used some of these cards. The cards are not bad in themselves, but we know a lot of people have used these cards and destroyed their credit scores. And some of them are on the path towards recovery. Others are clueless about what to do. So I would strongly advise you, go to the website, sign up for this session. We'll be spending an hour minimum breaking down the mysteries behind credit score, how you can fix a broken one, how you can build one from scratch, and how you can actually use that to unlock better opportunities for yourself. Okay, so that's all I wanted to share. And thank you for coming. Maxwell, I'll pass it back to you now.
Yeah, thank you so much. I just want to go back and reiterate the point you made earlier on. So if you are unable to do that, just scan now. That program is something you want to take advantage of. I've done mine. And Pascal didn't mention, on this program, you can also report past rent up to 2023, right? Pascal, am I correct? 2020 or 2022, I can't remember now.
Yes,
So you
that's
can
correct.
also, you can report past rent, and all that accumulates and add value to your credit. So if you're yet to do that, please take a screenshot, scan the barcode and, proceed to do that, or you can take a screenshot and do that afterwards. All right. Thank you so much. And it's been a great time. Great 1 hour, 15 minutes. And I really, really want to thank our panelists, Emeka Uda and Jennifer Coupe. I got it right this time. So thank you so much. I really, really appreciate you guys coming in and being humble enough to wait, even when you're done with your session to the very end. We didn't take it lightly. And have a great evening, all of our audience joining across Canada. Thank you so much for your time. Have a good evening.